Okay, David Morgan, publisher of the Morgan Report. Welcome,
Jack. Thanks for having me. It's great to be with you.
David. Thank you for taking the time today to speak with the Wall Street Reporter audience. It's an exciting day in the markets. The Dow is down just a little bit over 2,000 points, the markets are going crazy. You have a pandemic sweeping across the globe. It's getting pretty serious. Global trade is shut down. You would think that at a time like this, investors would be, fleeing to safety of gold and silver, but it's not happening. What's your take on this?
Well, my take is gold is performing as I would expect, really. Here's my take on gold. As soon as there was just a little inkling of this coronavirus / financial crisis, because I think I don't know if they're one and the same, but there's definitely a correlation to it. And gold started to move up and up, and I think it went up for 3 days or so. And then, of course, it got hammered down $60. But it already made a pretty strong move up. So as long as gold remains above 1550, which is the breakout point, it's very, very common for a commodity, if it's soybeans or if it's gold, to retrace down to the breakout point, touch it lightly, usually intraday, and come back up off of it. So 1550 is sort of a line in the sand. And we did that today already, and we have bounced up the last time I checked, Jack. So gold's also in a bull market again. And the function of a bull market is to shake off as many believers as it possibly can and climb that wall of worry. Right. So a lot of people are just worried that gold's not doing what it's supposed to. Gold actually is, in my view, and it's a steady view, and I've been watching the gold market for 40 years. So there's that. Silver, definitely underperforming, not doing its job, but I know we're going to talk a lot about silver later, so I'll just let that pregnant pause hang in the air. Gold stocks are getting creamed. There's so many values out there. I just wish I had more money in my account. I'm not going to buy it all or spend it all in one day, but certainly I'm starting to definitely, I wouldn't say nibble, but accumulate. That's a better word, because there are situations that were $5 stocks run by some of the best miners in the industry at 75 cents today. I mean, that's an opportunity the way I see it. So the overall market, I've been looking for a correction for way too long. Here it is. Is it over? Don't know. I kind of doubt it. It may be over for a while. And as you know, Jack, pretty extreme measures. The circuit breaker's already been lit off once. We had a pause at the open today. The Fed says, 500 billion, a half a trillion here, a half a trillion here, there, another half a trillion.
It's only 300 trillion.
Hey, what's 1.5 trillion of my friends, right? So the banking system is obviously broken. And so I'll leave it with that. I think I gave you enough feedback that we can move on. But it is not only interesting times, it's an adrenaline rush. And, hopefully, my subscribers are not, over leveraged or, wherever. I did call the top in the general equities. Actually, one of my mastermind clients sent me kind of a heads up and says, hey, look at the Dow and look at the DAX. And it looks like they're ready to go fall off a cliff. He didn't say fall off a cliff. It looks like they're at peaking. It's time to go short. So I did that on my video update for everybody. I don't know how many of my clients went short, but boy, I sure hope some of them did, because, nothing's better than picking a top, and it's hard to do. But even if you got in a few days after this started, one of the guys that worked for me just over in the overnight market put on a short position, and of course collected that open of 7% or something again today, and just closed it out in a matter of just 30 minutes or something, and scooped up a pretty good cushion on other losses he had in his account. So maybe I shouldn't get so detailed, but the point is, volatile times requires volatile action, and if you're in doubt, stay out. And if you can ride this bull, be prepared. But I'm still bullish gold.
Right. No, it's I tell you, it's been really difficult to pick a top in the stock market in the last 10 years, because the markets pretty much have been manipulated by the Fed. It's just the free money has inflated things a little bit. They always kind of come in to rescue the market, which is I guess okay, but there's talk right now of gold of $2,500 gold might have seemed a little bit, a little bit out there a few years ago. Right now, it's pretty close, and there was even talk of $5,000 gold. Are you in that camp?
Pretty much. I mean, if you go back and check when the first thing we wrote for public domain and the internet was early 2000s, and I talked about engineering the price of gold. So I think if you Google it, it's still on the web somewhere, engineering the price of gold. And what I do is I just take what is the M1 money supply and what is the amount of gold that the Treasury purportedly owns. And if you do that, arithmetic, third grade arithmetic problem, you divide dollars by ounces, you get dollars per ounce. And when you do that, it came out about 2,500 an ounce back in the early 2000s. Well, how much printing has gone on, and how many QEs and how many Operation Twists we had since 2003 or 4? A lot. So right now, that if you do that same math problem, you're in actually like 13,000. But I'm conservative by nature, so I think 5,000 is doable. Usually markets react and overreact. So if you look at any market, it's undervalued, fair valued, and overvalued. The stock market, as bad as it's been hit, is still extremely overvalued, and gold is extremely undervalued still. And silver is so extremely undervalued, it's just, I have to laugh even though I'm getting squeezed here a little bit. But going back to that engineering price of gold, so in 1980, at January 21st, when it hit 850 gold, if you did that math, what we'd find out was that gold, by the amount of dollars in circulation, M1, I'm talking cash because gold is cash, the ultimate cash, but by the amount of gold, it came out 400 an ounce. And so we were at 800 an ounce, which means we had a double ability to go back on a gold standard, basically. And so that's an over-evaluation. So if you wanted to cover every dollar in circulation out there, buy gold, you needed $400 an ounce gold, yet we were over 800. So if you use that metric, and I'm not saying, I'm just doing a thought experiment with you, Jack. You'd say, well, shoot, if you take 13,000 and doubled it, you're looking at $25,000 gold, which sounds absolutely insane. But, when the Dow was 1,000 in 1967 and laid there forever and ever and ever, if someone told you Dow's going toast to, where it's been, you see, you're out of your mind. Can it go 25, 30 times? And so who knows? In these markets, a paper price, and sorry if I interrupted, but a paper price at the end of the game is pretty hard to determine. I'm not saying we're seeing the Weimar Republic. I'm not saying that, but, a piece of paper starts to get less and less valuable, and people start to trust it less and less, and that's when you start to get these exorbitant, numbers in terms of paper, but not in terms of value, because the value of gold will vary, and the value will be more valuable as time goes on.
Yeah, one thing. I mean, when people say that this move to, let's say, 5,000 sounds crazy or whatever, if you look at some of the recent moves, let's say in Palladium, was it rhodium? I think.
Rhodium, yeah.
I mean, is it up 20x?
Yeah.
20x in a few years.
Yeah.
And my career started. Actually, I was when I was 16, I was a phone clerk on the New York Mercantile Exchange in the platinum palladium pit.
Oh, wow. That's a rare place to be. Okay.
This is I think maybe 89, whatever. And, that was a sleepy market.
Yeah.
I mean, it was the worst. Yeah, I wanted to be in the crude oil pit next door, but it was that was, right. That's what I got. Yeah. And it was I remember there was the platinum, the palladium was it traded only a few hundred contracts a day, if I remember.
Yeah. Sure.
But David, the reason I really am excited to do this interview is I came across a video online where you did a lecture on the gold-silver ratio, and I found that fascinating. So first, tell me, before we get into that though, what is your? I mean, you're kind of known as Mr. Silver. What is your? What's the reason for your obsession with this metal?
Study, really. I mean, I was more of a gold bug when I was your age, Jack, and the hunt thing happened, and I wondered why silver outperformed gold so much, and why would the hunt so fascinated with silver and not gold. So I started to dive into a study on silver, and I had that question, why? And the more I dug in, the more fascinated I became with the metal and its history as money. And beyond that, of course, the features we all know, or most people know, and that's the industrial capabilities of silver being, conducting heat better than any metal, reflecting light better than any metal, conducting electricity better than any metal, uh, and how much it was needed as a green metal. So I just started looking at, well, if you had a stock that was being bought back, which used to be rare, now it happens all the time. But if you knew you had a company and it was on a share buyback program, you had a steady, 20% coming out of it every year because that's the way it was set up. In other words, you had a demand that basically never went away.
Right.
And then on top of that demand, you had a subsequent demand that ebbed and flowed called monetary demand or investment demand. Then you would get in this double squeeze. And Dave, what the hell are you talking about? Well, you'd have a double squeeze because what would happen is the investment demand would start to push the price higher and higher. And then the industrial demand, no one warehouses anything anymore, so it's just in time inventory. So once these companies like Apple and Samsung and Ford Motor and whoever saw that silver was getting pushed up, they get a little bit panicky and say, we better warehouse some. And if we don't, we can't. We're going to shut down our automobile line. We're going to shut down our iPhone factory. So they would go back into the market at whatever price and buy.
And this is happening now, by the way. This is
production lines open.
This is, yeah.
So they would buy silver. Well, that bid would take over all the bids that came in on the monetary side. So now they're bidding. So now the monetary demand goes even higher. So they kind of feed on each other. And this is basically what we have potentially in silver. And I guess I'll just stay on the topic, Jack. I knew we were doing the interview, so I did a bit of phone calling, which I usually do about every month. And, I've been lazy with such a dull market, like every other month or every third month. But check with a couple of the bigger guys that do hedge funds on physical, and there are some that do that. And you can't find eagles. So you can't find silver eagles. They're by the hour, you have to call in and ask what the bid-ask spread is, and it just keeps widening and widening. Sold out of eagles. Maples are basically sold out. You can get 100-ounce bars. So basically, the way I see it, and from reliable sources, we're facing 2008 again, which means, for those that don't know, that at that financial crisis of 2008, silver was scooped up by the smart money, hand over fist, and basically there was a shortage in retail product. Coins, medallions, small bars like 10-ounce bars and 100-ounce bars. And those products got bid up about 30% over the paper price on the COMEX.
I remember this. Yeah. There was a shortage of physical.
Yeah, so that looks like it could be happening again here. So we'll have to see. And what's interesting on the physical side, and I wanted to look at for my own edification and for the interview, I'm going to drag this over here. Whoops, it went away. Oh, it's right here. Let me just double click this, Jack, real quick. So if you look at the COMEX, it has like 325 million ounces of silver on it amongst the various banks, Loomis, JP Morgan, Delaware Depository, HSBC, and that's a lot of silver. But 243 million is ineligible, which is basically long-term investors, which the register category, which is all the dealers, is 80 million ounces. Now, I've seen it as low as 35 million ounces a few times in my career. And when it gets at that level, it's basically always I wouldn't say it's a short squeeze, but it's the people that see that small amount get pretty uptight. But 80 million in today's world is spit in the ocean, excuse the rank euphemism, but it's not very much metal. So, this 100-to-1 ratio has always portrayed a financial crisis of some type. We're there now. It's a spike usually. I don't think this is going on for 8 weeks. I don't think it's going on much more than a few weeks. And then we'll start to see the ratio come back down. So one of the main dealers I speak to on a regular basis said two things. One, the spreads are widening. You have to check, almost hourly to get a fix, to get physical metal, silver. And a lot of the gold guys are calling in and say, you know what, take my 10 kilos of gold, swap it into silver. Take my, X amount of silver or gold coins, swap it into silver. So they're kind of getting a double whammy because people are taking advantage of that ratio. So even some of the gold guys are saying, you know what, I don't even like silver very much, but a 100-to-1 ratio, are you kidding me? I'm going to swap my gold into silver right now and wait till it gets back to 80. It'll at least do that and swap
Okay.
back to gold.
Okay. Because I'm going to ask about that ratio again in a second, but I just want to get back to this the physical metal right now. So you're saying there is a shortage of a physical metal in terms of coins right now?
No, I'm not. Thanks for calling me out, because communication is always the key, right?
No, yeah.
I'm saying that potentially we could be seeing another 2008. It's too early to tell, but my radar antenna is up pretty high, saying, you know what, it could happen again.
Okay, but there's definitely there. So you're saying that basically there is the premium increasing?
Yes,
it
is. And that shows you there's a tightness in the physical market. So when the spreads widen or the premium increases, same thing, same way to say it. That means that there's a lot of people that want it, right? It's just like buying a car at the auction. The more higher bids go, the higher it gets bid up.
Yeah.
And this is the same thing in the silver market. Now, I know the price is low. Same thing happened in 2008. I mean, the price was incredibly cheap on paper, like $9, but you were paying like 10, 11, like 12, 13 if you wanted product, and in a lot of cases. And the only place you could really get it was off the exchange. So what I did in that crisis was I took 1,000-ounce bars off the exchange, moved them to a minting friend of mine that minted into half-ounce silver rounds with my website on it.
So you're one of those rare people that actually took delivery.
So that $9 silver looks like that in my form. Okay, that's an Indian head, and this is the website. So that's a half-ounce silver coin. So at $9, shipping, transportation cost, and about $1.20, I think he charged me per coin. So call it all in call it $11. So I bought $11 silver at the bottom of 2008, somewhere along there, maybe $10.50, something like that. And I may do it again, because you can get it off the exchange. But no, that's right. Not that many take physical delivery off the exchange, but it certainly can be done, and it's not that difficult. In fact, on the Morgan Report for the insiders, I have a little report how to take silver off the exchange.
Right. So back to the ratio. I saw your presentation. I was fascinated by it because like before we started the interview, I was just mentioning. I didn't really pay attention to silver. I always found it kind of dull. Along with platinum, palladium, rhodium.
Most people do.
Yeah. But all of a sudden, but in your in the video you talk about this ratio, the historic, the track record. Can you tell our audience a little bit about the history of that ratio, why it came to be?
Yeah, I mean, basically, when the free market reigns, and there really is a free market, and there's no pseudo-free market or neoliberalism or any of the stuff that's going on now, the market determines the price of all goods and services. So in the 5,000 years of recorded history, if you look at ancient Egypt, and the gold-silver ratio, everybody, is how many ounces of silver does it take to buy an ounce of gold? So if you go back to the earliest recorded history in Egypt, it took 2.5 ounces of silver to buy an ounce of gold. So that's a 2.5 ratio.
Okay.
And then if you go through the next 1,000 years or so, it never got above 20. And when it did get above 20, it was very short-lived. So most of the, last 5,000 years of recorded history, silver traded at about 15, 16 to 1 or lower for thousands and thousands and thousands and thousands of years, 5,000 years. And after the crime of 1873, when it was demonetized, is when you started to see this ratio of 100 to 1 happen. I think this is the third time, I'd have to check my records, that it's actually spiked to that level. And it did hit the 16 to 1, which is what I call the monetary ratio. It's not the natural ratio. It comes out of the ground right now at about 9 to 1. We'll round it up to 10 to 1. So silver's trading, at 10-fold over what the natural ratio is. And it's like 5-6 times over what the classic or monetary ratio is. And the ability to stay at 100 to 1 in the past has been minuscule, meaning it's a spike. It doesn't last at that level very long. And, from what I just gave you a market commentary with real physical buyers with some of the biggest dealers I know, it may start bidding the price higher because, like I said, the mint's out of silver eagles right now.
Yeah.
So So people are not as dumb as, some, cursory mainstream types say. It's like, oh, these silver guys, they don't know what they're doing. They know when to buy low. They did it in 2008 and they're doing it again now.
Yes, I mean, even what is silver now? I don't know, even $16 an ounce. I mean, it doesn't. In theory, it doesn't look cheap, but if the ratio normalizes, if it goes to this, let's call it 10-1, and why not? So then you'd have $160 or $150 an ounce silver.
Yep.
I mean, there's really and it sounds crazy, but then look at the run up in the what is it, the palladium.
Yeah.
Why can't is there any reason why it can't happen with silver?
No, it's all physical demand. It's not paper demand.
Right.
And there's the palladium market's the best illustration I can give you as far as how to break a manipulation. I mean, palladium is used for catalytic converters. It's an absolute necessity, and you can't shove a piece of paper in there saying palladium on it. You got to have the physical. And the same thing with the silver market. And there's just so much disinformation about the silver market, and it's never presented to your main stock investor that maybe you should own, silver. But yet you get somebody with the clout and the brain power of a Scott Maynard from Guggenheim. I mean, this guy is, as far as I'm concerned, right on the money. Sounds like me. Hope he takes it as a compliment. But anyway, he talked about it's just one bubble after another. And then the Bloomberg interviewer asked him, where's your go-to investment for 2020? And he says silver. And the guy rocks back like, silver? Why not gold? He says, because gold's fairly close to its nominal high or its recent high, which was 1900, as you know, but silver is like 65% under its high. And then, and to his credit, the Bloomberg interviewer asked him, well, do you think it could go parabolic, like, he didn't say palladium, but like these other metals? And Scott said, I think there's a high likelihood of that. So, look, there's no fever like gold fever. I mean, there's a reason that exists. I didn't make that up. That's been around for decades or maybe centuries. There's no fever like gold fever. There's no fever, I know. Once people get scared, banks, institutions, money managers, and they run to gold, that's going to bid the price of gold. Where? 5,000, 10,000, 15? I don't know. What I know is once that psychology gets into the run to gold, then that'll spill over into silver. And since silver is such a small market, and it's more accessible to almost everyone, then you'll start seeing silver outperform. And, I said in Engineering the Price of Gold, I could give you the theoretical paper price of gold. You take the money supply and you take the amount of gold the Treasury has, you do the division, and there's your price. Silver's not that simple because silver's been demonetized. So I said, well, look, if you go back to the classic ratio 16-1 and gold's at 2,500, there's your number. If you go back to the natural ratio, which I don't rule out, which you just mentioned, Jack, 10-1, then that would say $250 silver. Now, I'm not predicting we're getting the $250 silver. What I am suggesting is that we are extremely undervalued now, and it's such a tiny market. I did a video you might want to look up, not you, Jack, which you might, but your audience, and it's called Myth in the Silver Market, MYTHS. And in the Myths in the Silver Market, I talk about this myth that all the coin dealers have, and they're not even thinking when they say it, but they say everybody ought to own a little. A little what? A little silver. Everyone ought to own a little. Well, everyone. There's 7 billion people on the planet, and what constitutes the word little? It's a big term, but, so I go through the math. If everyone owned a little, and there's 350 million people around numbers in the U.S., and they all own a little, I'd say 2 ounces is a little. You're looking at $30, $35, for 2 ounces of silver right now. I mean, is $35 going to change your life one way or another, Jack? No, I doubt it. I'd say that's a small or a little amount. So if everyone in the U.S., which is only 5% of the world's population, bought 2 ounces of silver, that'd be 700 million ounces of silver, and we only mine about 800 million on an annual basis. So if everyone owned a little, silver would be who knows what price. But again, we're misinformed. It's an industrial commodity. It's, never talked about. I mean, right. When Scott Maynard talked about it at Davos, I just about fell out of my chair. I thought, man, this is news to me.
I didn't know about this. I actually did. This is the first time I'm hearing this. But he's like an establishment guy.
Oh yeah, he's right on up there, and I really admire what he said. I mean,
Okay.
for lack of looking like an egomaniac, he sounded like he gave the answers I would give. One bubble to another. You go, on, you had the Resolution Trust Corporation taking care of this first housing bubble back, I think, in the 90s, and then you had the tech bubble, and then you got back into real estate and gave everyone a subprime mortgage. And I mean, it just goes on, and it's just a bunch of lies, basically. It's like you can print yourself wealthy. You can in Keynesian economics for a while. And then the truth comes out. And the truth is you can't print wealth.
So right now, I mean, historically, what percentage of portfolios did Americans have in precious metals? Was it like 5% historically? What was the number?
Yeah, it's really hard to get a handle on that. It's a great question. You're going to have to give me some leeway because no one knows the exact answer. But it looks like, yeah, around the 5% level in, the previous generation. And we're at a 1% gold holding right now and a 0.02% silver holding right now.
Yeah, it's very underinvested historically.
Yes, very underinvested. So if you just were a pension manager or anyone with, I don't know what I should say. I don't want to get people too mad at me. I'm a little wound today. But, if you just went to that percentage, that'd be a five-fold increase in gold, right, than where it stands right now at 1%.
Yeah. Even now, what's interesting though is, probably I would say, half the people watching this video are probably, they're in that, I call it like the Bitcoin generation. They're like, millennials, and what's interesting is they, it's. They don't really believe in physical metals. They believe in this Bitcoin thing as a, I guess as as an alternative currency, and that's it gives them, I don't know, liberty or what have you. But in reality, I mean, the blockchain or whatever, once money is electronic, you don't really have control over it. I mean, it's out of your control. It's the government or anybody can come in and take that.
Yeah.
If you have the metal physically, then somebody has to come to you physically and take a risk of getting that money from you.
Yeah.
It's a little different. So what do you recommend to your clients like right now? Do you recommend so if somebody wants to get positioned for the bull market ahead in these precious metals, do you recommend physical metal? Do you recommend producers, explorers? How are you getting positioned?
Yeah. Well, I've always been consistent. I've always recommended that people get real metal first before they ever talk to me, because what we specialize in is pretty much the underlying equities. We've looked at ETFs and even leveraged ETFs. We look at, I don't really do options too often, but basically we look at the mining sector, top to bottom, outside of the silver and gold industries. We looked at rare earths, we looked at lithium, we looked at cobalt, I've done moly. You name it, we've pretty much done it. Coal. But right now, the market guides me. I don't guide it. And the best place to be over the last year or two has been precious metals only. And I kind of forecasted that on a fundamental basis, because when you get near the end of the financial collapse or crisis or adjustment or reset, pick your favorite word, you see where the big run is, and runs to the money metals. So that's where we are. Now, we had a great year in 2019, and of course the sell-off, gold stocks are stocks, and they get sold off with the general market almost every time. And they were holding up very briefly, and then they just got creamed just like everything else in the market. So now is actually a good time to start to accumulate. You don't want to try to pick a bottom. It's pretty tough. But certainly the values are really, really good, as I just mentioned at the beginning of your program. So now if you got the guts, I told everyone recently, I always say keep a 15% stop on, and if it jumps that or whatever, you either got to gut it out and just hold through this, or build some cash, don't buy anything, hold for a while, let's let the dust settle and see what happens. So that's basically the attitude I've taken currently myself. I am starting to accumulate today, both physical and some of the miners. Like I said, a well-known name, $5 3 weeks ago, 75 cents a day. That's just too good a bargain for me.
Can you mention his name?
Rob McEwen.
Oh, okay. What's the company? What's his?
I won't give that out.
Oh, it's one of his deals though.
Yeah, he ran Gold Corp for a
Yeah,
long
go.
time, and I loved it when he ran Gold Corp because not only was it one of the stalwarts for a long time, in fact, Gold Corp for like a 10-year time frame outperformed Berkshire Hathaway, which I used to love to brag about. And they used to hold physical metal in the account for the shareholders. So it was like the best of both worlds for someone that was, let's say, retired and wanted a conservative investment. They had a gold equity and gold in the vault by owning a share or 10 shares or 1,000 shares or whatever. So really good. I tried to get some of the silver guys to do the same thing. And really a few did listen to me and some did a cursory investment by holding some physical silver. But most of these mines are at the margin. The best mines in the world are barely making it in the silver world because the price is so low. As efficient as they are, as cheap a labor cost as they have, and very good jurisdictions, they're just barely able to eke a living out. And that's unfortunate. I mean, something as robust as silver for what it does, for the green, as a green metal and everything it does for our technological wherewithal, you think it'd be far more valuable than it is on a price basis. But here it is.
Yeah, it's pretty interesting. But what kind of in terms of allocation, what would you recommend people do?
Yeah.
What percentage metal? What percentage?
Yeah. Well, I do that in how to use the Morgan report. So basically, I've told the public, and I'm pretty consistent, that 10% of your holdings should probably be in the metals. And then I say in the Morgan report, if you have 100,000 to put in the metals, then and you're this age, you might put 50% in physical and 50% in the equities. And the equity side, you put 80% of that 50% in the top tiers that I recommend. The 20% that's left, you put maybe 15% into the mid tiers, which are higher leverage, probably better risk to reward profiles. And then lastly, you speculate with money you can afford to lose into my carefully selected junior situations, because they're not all minors. And that's that. And so you have a balance between physical and equities, slanted to companies that really will make you money. I mean, in last year on the equity side, I picked 8 stocks. I had one on hold. Out of 7 stocks, I had 7 winners: 57%, 73%, 100%, 60%, 43%, 58%, and 50%. Average of that, Jack, was 63%. And I have said, and I still think they'll probably do that well again this year. But boy, if you bought in January and you're sitting here in March right now, even I added to one of my top positions at 113, and I think it hit 92 today. And that stock was making new high after new high. But they'll come back unless this is the Black Plague and everything's over for all of us. We're coming back.
Yeah, it sounds like it's close to the Black Plague.
I know the market's acting like it is. Yeah.
I mean, in Italy, all the stores are shut. I mean, I don't think that's been done in how many centuries? 500 years, maybe.
Probably
since they had the Black Plague.
Yeah.
In Venice or whatever. So what about the platinum group metals? What's your outlook for those?
Well, I was early on Palladium and got everyone in, or if they wanted to follow me in, and I got out way too early. I didn't follow my own rules. My own rules are the market knows more than me, and followed up with a 15% trailing stop. And I got out at 1,000, almost got back in. I just didn't have the guts to pull the trigger. I wish I would have. I'm sure some of my people probably are still holding, but I think it's topping out for a while. I mean, if you are going to get at least a quarter's worth of damage into the global economy, the GDP of the globe or the flat Earth, whatever it is, I have to make a joke. I think it's going to only affect us for probably 6 months, but that will curtail some need for catalytic converters. So I think we've probably seen the top in Palladium, at least temporarily. I wouldn't short it here. I'm really looking for the platinum Palladium spread, and it hasn't given me any clues yet, because I don't know how much time you've got on this, but really a long time ago in the early 2000s, Palladium went from a few hundred to 1,100. And the reason it did was only platinum was being used in catalytic converters, because they are interchangeable regardless of what you hear in the mainstream press. So what happened was Ford Motor Company took a look at their books and did a calculation, said if we shut down the line for a small amount of time and swap our catalytic converters from platinum into palladium, we're going to save this much money and our profit margin is going to go up. What no one told Ford was how small the supply is, just like no one tells the silver investors how small the supply is. And the Ford Motor Company put an order in for palladium to reduce their costs, except it shot the market up from, like I said, in the hundreds into the 1100, way outperforming gold during that time frame. And this is a big problem. So the LME basically took control, which I don't think they should have, because that's not a free market. Basically told whoever owned it who could, get it and who had to lease it and all that kind of stuff. But definitely, again, very distinct example of the physical market does take control of the price during certain times. And we're there with palladium again, except this time it's not just one auto company. It's basically, several, and it's needed. And, are you going to switch back to platinum? No. I mean, most of your gas engines, catalytic converters use palladium and the diesels still use platinum, but you could interchange it for gas if you wanted to.
Okay, so you're not a doom and gloom guy. I mean, essentially, you believe that the coronavirus thing.
Yeah, all things are relative. I'm sure to some people I am, but most of my, people that know me, hear me, watch me, see me, come to the gold shows or whatever, think I'm pretty level-headed and pretty non-doom and gloom. I mean, the human being is pretty adaptable, anti-fragile. I mean, we're pretty robust, and we get through almost anything, everything. I mean, this is my lifetime. We've had several financial episodes and, all kinds of stuff. I'm somewhat prepared. I think it's kind of foolish not to have some preps going, but, balance. I preach balance because nature preaches balance. And back to the stock market or the gold market, undervalued, fair valued, overvalued. When it's overvalued and everybody wants it, sell it to them. When the stock market's undervalued, no one's going to touch stocks again as long as they live, and it's really undervalued. Maybe that's when you start accumulating.
Okay. In terms of the physical metals, what do you have a preference for the form? I mean, coins, bullion?
Pretty much. I'm not a collectible guy, but the coins are the best place to start. And I used to suggest, I haven't done it for a while, that if you're just getting started, it makes about the most sense to buy what I don't like the term, but the junk silver market, which is 1964 or earlier, 90% silver coins minted by the U.S. Mint. So you got dimes, halves, quarters in 90% silver. Those are very small units. They're recognizable. I mean, you could teach a 4-year-old kid what a silver dime is compared to a slug and show them the difference between how they look, how they feel, and how they ring. And so that's a great place to start. The bag market used to be so plentiful that when I started trading futures, there were two silver markets. There was the bag market and the bullion market. And you could arb between the two because each bag is worth 720 ounces of fine silver. So you could do the math in your head and you could arb it. You could see where a bag was undervalued or overvalued and arb between the two. But after the Hunt situation, Hunt actually had cornered the silver market, and people don't know this unless they've read Silver Bulls by Paul Sarnoff, but Hunt didn't just have futures. He did take a lot of physical, and one of the deliveries, they couldn't fulfill it. So the exchange said, hey, we can't, give you 1,000-ounce bars to fill your order. Will you substitute bags instead? And he said, sure, go ahead. But if he said, no, I want what I paid for, I want bars, they would have defaulted, at least for a while. But that's a subset that only a silver nut like me even knows about. It's for, it's not common knowledge by a long shot, but it's something that's in the book Silver Bulls by Paul Sarnoff. You can read about it.
That's I didn't know that. He should have asked for the million.
Well, yeah, exactly.
So what? In terms of outside of the precious metals, are you bullish on anything else like the battery metals?
Yeah, I'm bullish on the battery metals, and that's something you have to watch carefully, which I do. I mean, this graphene thing is a pretty interesting story. I'm watching that, and I almost wrote about it last month, but I wanted to pause for a while before I put together a report. I've got a technology stock that surrounds the electronic waste. And then the parent company, because this company was a spinoff for the other company that I had on the list very early on, just got a contract set up for getting e-waste out of catalytic converters. So I just did a free webinar that's about how my favorite way to play the platinum and palladium market. And it's by buying this stock, because the stock is at a market cap of somewhere at the time of the interview about 40 million. And forward-looking statement, disclaimer, I own the company. The first year of full production would be a gross of 250 million. So if you've got a $40 million total company and the first year they're on full production makes 250 million gross, I think there's a lot more upside than palladium doubling again, right? So you got potentially a 5-bagger, maybe a 10-bagger. I mean, who knows? I don't know, but I know value, I know numbers, I know the markets. And so that's a great way to play a platinum and palladium situation, much better to my thinking than just going into the hard physical.
And what's the symbol?
I'm not giving that out. This is how I get new subscribers. I'll tell you after the show.
The morganreport.com. We're gonna have the link below.
Yeah.
So actually, let's talk about the letter. What do you have? Like, what's the service? What's the cost? What's the
Yeah, it's $50 a month. I mean, it's about 1/5 of the cost of most of the guys in Vancouver that are better known. There's an exploration geologist that's at all the gold shows. Great guy. He charges like $16.50 a month, and all he gives you is juniors. If you just play the junior market, it's extremely difficult, and most people lose money because you only have like a 1 in 5,000 chance of getting a company that actually becomes a mine. So I do play that market. I probably wouldn't have a business if I didn't, but I'm very, very careful. And I do have a couple of silvers in there. In fact, one of them is actually holding up and going green in this down sell.
Wow.
And I got a gold company that's going green during this down sell. So those are two small companies. One's I really like it, and it just keeps somebody out there is very smart and knows what this company's about, and we do. Morgan Report readers know. And it's just staying green, barely, because in in a market like this, you don't want to show your hand too hard. You just keep whatever anyone offers, I'm buying. You offer me that, I'll take it. It's like buying that Rembrandt at a discount. You know what it's worth. So anyway, I write an editorial. Usually it has to do with geopolitics. I'm not a political guy. The overall market, and then of course I touch on gold and silver almost every month. And short-term, medium-term, and intermediate-term to long-term basis. And then we do company updates for the companies we track. And then we have been doing a blockchain briefing every month for months now. So we keep our eye on that market. We follow some of the silver-backed crypto fairly carefully. So we do that. Letters to the editor. People that are paid members can write 2 questions a month and get a guaranteed answer. And then every once in a while I'll do an interview. That's kind of rare, but I do them. And then guidance really from the readers at times.
So you follow, so you follow Bitcoin?
Yeah, I actually, it's not just me. I mean, I have a staff, and David Smith has worked for me for almost 20 years. Really, he's into that market a lot more than I am, and he follows it, but he writes that section of the report every month. But yes, we do follow.
Okay. Your letter? Are you guys? What's your take on Bitcoin right now with the cryptos? Are you bullish?
Well, Mike, I'm not a big crypto fan at all. I'm okay with the blockchain technology. I'm sure it's going to be used, and I own very little Bitcoin. I do own AGX, which is a silver-backed crypto. And a lot of people that follow me have got into it. I basically started by saying, let me put in my silver to fund the company. And it's not just mine. It had to be a lot more than my silver to fund the company to start off. And let's see where this goes and just wait on the sidelines to see what happens. But then I'm free market. If you want to take the same amount of risk that I took, do it if you're inclined. But realize, most startups, 99% of startups fail, so you don't know, it's sort of like picking a junior miner that becomes a mine. It's pretty tough.
Yeah.
So they're pretty well on their way, and they've done a lot of things right. They've got through all the regulatory hurdles that a lot of these companies have that are getting shut down because there are governments out there doing good for the people that are shutting some of these gold and silver-backed cryptos down. So this one's in the right jurisdiction with the right lawyers and everything else. So a lot of positive, but they are getting skosh on funds. So they're going to have to get even busier and try to get some more capital in to keep it going. I think it's going to survive. I think it's going to do well, but it's a bit of a pucker factor. But I guess everything is right now, Jack.
Right.
If you're blue chips, you're probably
David. One last, we talked about. I asked you briefly about the battery metals, but what's your take on uranium?
Again, my staff is a little more bullish than I am. We do have a uranium company I really like. I know the management, met with them several times, and I think it's going to do well about 2 years out. I think if you are a uranium investor, you're going to have to be patient. But yeah, I think it's a value play.
Okay. Okay. Any final thoughts on the precious metals?
No, I think I covered it all. Just, if you think silver is done for, just look at the mint running out of silver, the Canadian mint running out of silver. I should say running out of silver, running out of coinage, the bid-ask spread getting raised, and it does appear that it could be, not would be, very similar to 2008 all over again. We'll have to wait, Jack, to see if that's predictions correct or not, but I think it may be a good time to start getting into the silver market. If you left it, you want to come back, or if you're new and you understand what's going on with gold and you want to get gold for a cheap price, buy that 100-to-1 ratio, swap that silver back into gold when the ratio moves in favor of silver.
Definitely. David, thank you for your time, and let's catch up with you again at some point in the future.
Great. Thank you, Jack.